Good morning, everybody, and this is your Dow Jones day trade setup for today. So not much movement, still very much confused, big up, big down. It's been the case all week. One thing that is sort of concerning me is the oscillators. So they are sort of crossing over on the 8 hour. Remember, when they cross over far apart like this, that's typically an indication of a fairly strong move to the downside, and that lining up with what looks like a flag there and there, I think you need to be a little bit cautious. It can still go anyway, so let me put it to you this way. It's inside bar here on the 8 hour, massive inside bar, engulfing bar, engulfing bar. So that's three bullish patterns. And it's off structure, it's not tidy, but it's definitely off structure. That was the previous swing low. And if I look to the left, you'll see quite a few swing lows. And if you look at it on the weekly, you'll see a hell of a lot of swing lows there. So this is a zone that the buyers keep coming in at the moment. And I think if you just delete that, and let's just delete that flag, have a look at the weekly bar at the moment. So this is what the bulls are chasing today. They are looking for a pin bar, and they're going to be looking for a green body on this pin bar, because then on Monday, basically, they need to hold the top of that bar for a continuation to the upside to go and test the all-time highs. So that's kind of what the bulls are aiming for, and the bears are trying to close below this 33,959 area, probably rounded off to 3,400. So that's the area that they're focusing. They're looking for a solid close below that, which would then nullify all these tails to the left where the buyers are coming in. So that's why you've got all the volatility as well. Never mind the political noise, just watch the charts and you'll see what's going on. So you've got some bullish structure, and then you have some bearish structure being on the flag, and you've also got this breakout here that we are basically failing to get it back above, which is 34,685. So with all of that macro noise in your head, start looking down at the 3 hour, and we can see there's no new information on the 3 hour really. Same scenario. We've got lots of bullish patterns, engulfing, inside, engulfing, and then we're busy with an inside bar and a continuation here, but below the moving averages. So trend is down. We have a flag forming. So ultimately, I could probably just add a third level in on to the charts, and then we can come to the hour and break it down into some sort of structure. Okay, so firstly, we are in the range. This is a range. It's sideways. Shouldn't be trading ranges. We know that. So ultimately, when we are range bound, we're looking for a break of some form of structure, which would obviously be this top level here to the upside. So that's 34,685 area. We're looking to look for a decent break and a retest there. Have a look at the moving averages. Starting to group together, we're still below the 155, so technically the trend is still down. And then I just want to add that diagonal trend line in, because it signifies two things for me. First thing is it is a higher low. There's a previous low, higher low. And the second thing that it starts building is we have a flat top triangle. Now at the moment we've got two touches to the top and basically two touches to the bottom. So we're looking for fives, and obviously we look for a rejection there or a rejection here, and then we're looking for the break, and that would validate that flat top triangle for us. So mixed signals, more bullish signals than bearish signals. The only bearish signal we have here is a potential flag. But for me, I think the range is probably the one to pay attention to. Ignore your diagonal trend lines. Pay attention to your horizontal trend lines, which is basically your support and resistance. And pay very close attention to this break, because a break to the upside here, 34,685. Remember what I said on the weekly? That starts giving us a sort of a green body. So it'll be a green pin bar, and a green pin bar is something that they're looking for. Watch the oscillators here. The bulls are really trying to keep this thing afloat, and I really don't see the big crash that everybody is predicting. It's I think that's just sucking a lot of people in, and especially retail traders that are following the hype and are more than likely going to get burnt if they start jumping in looking for shorts. So my advice to you is just be patient. January hasn't been a very strong month for me. I think I made 3 or 4 trades in January, so it hasn't really been a profitable month at all. But the trades will come. So February will come, March will come, and there'll be there's a different set of rules that'll be governing our trading. But at the moment, we're sideways here. It looks like forming a bottom. Also looks like a flag forming. And the longer we reject the 155, the more I'd start looking for breaks to the downside. But at the moment, sit on hands. Break to the upside and retest 34. Let's just say 34,700 area. And ultimately take out the highs. So I know that level I've got there is the bigger level, but you'd obviously need to take out the highs. So that's 34,820. So take out 34,820, come back and retest it. That's going to be break of the 155, retest of the 155 EMA, moving averages crossover. Oscillators should be pointing to the upside. Give us a new high, wait for the next higher low, and that's the signal that you will be waiting for to start a trend reversal back to the upside. Converse is true if we start breaking below the low of yesterday, and that is down here at 33,637. So break below that, come back, test it, then I'd be looking at shorts. Anyway, that's kind of my view at the moment. So it's really sit on hands until we take out the high or the low of yesterday's candle. Or yesterday's daily candle. So that's kind of the view. But for me now, the weekly bar and probably pretty much the daily bar. You can see the daily, all these tails, range bar. So we've had 2 pin bars and 2 range bars this week. That's not a bullish, very bullish signal. It's not a very bearish signal either. So that's just indicating caution, and I think that's exactly what I'm doing today. Wait for the break of the range bar yesterday, and little tip: once you get the break of the range bar, you can expect a move equal to the height of the range bar, either to the upside or the downside. Just keep that in the back of your mind. That's typically what happens. Don't believe me? Go and back test it. Go look for all the range bars and whatever time frame you want, and see what happens when you get a break and retest that range bar and what the target is at the end of the day. Anyway, that's kind of my view for today. It's really sit on hands and be careful until you get the break of yesterday's high or low on the daily. Hope it helps, and we'll catch up with you on Monday morning. Enjoy the weekend. Cheers for now.